What's up guys, welcome back to another market watch list. Last week we had quite a low bit of liquidity in the markets for some time. This was mainly down to the fact of Thanksgiving in America on Thursday and Friday. This is because the majority of the US banks, well all of the US banks were not trading because it is their national holiday. So starting this week we should see a lot more liquidity, which helps to move the market and produce the more cleaner, impulsive moves that we like to trade off. So starting off with the DXY, we can see, as pointed out last week, price is still interacting with this support and resistance band. And on Friday, we had a lovely shooting star, which is a bearish reversal candle. So if this is true, even when the liquidity comes back into the market, I'm expecting price to break through first the daily 50 EMA that we've got around the 9800 level. Hopefully see it go on to make a lower low, retest, and then go on to make further lows. Price is still in a relatively key area, so we will wait for it to make its move. However, this is quite a significant close on Friday. To get even more confidence that the DXY will be heading for downside potential will be to get a close below the daily 50 EMA tomorrow. So as the liquidity comes into the market, it's probably best just to let Monday play out. Sometimes taking no trade is the best trade. And next we will move on to another. So here we had CAD Yen that was featured in one of my watch lists around 2 weeks ago. And that trade is currently running about 2%, but as I've mentioned before, I'm no longer in this trade. However, it is still running in this nice bullish structure of higher highs, higher lows, and going on potentially to make a higher high here on the daily. However, price is in an area where it has struggled before, as you can see, late June and late July, various wicks to the upside, and we did see this reversal here. And it is struggling in this area again, so I'm looking at a potential setup to try and get in on this pair to go long. And the most obvious way for me would be a fib taken from this low here to this high, reversal back into the 38.2 fib zone, which coincides with this support and resistance band, and also the daily 50 EMA. As you'll have seen if you've watched a few of my previous watch lists, I use the 50 EMA on all time frames as an added confidence. So yeah, we would also have the ascending trend line as another confidence to this trade. Price is only around 40 pips away and is currently stalled at this level. So it would be normal to expect price to have a little bit of a breather, retest this level, hopefully reject it, and then we can see a push onto the upside. If not, if price doesn't make this move and we do see more yen strength, could see a break through this low, which would then break the bullish sequence as we would have had a lower high and a lower low. Wait for a retest of the trend line, whether it be a close retest or here of this support level, which could turn resistance, and then target downside lows. You've got to be prepared for both scenarios, but I do favour long on this pair at this point in time. But if this setup does work where it breaks this low, it would be a perfectly good setup to then go short on this pair following the retest. So we'll move on to the next pair. So the next pair on the watch list is Euro Australian dollar. And this pair is in a bit of an interesting scenario as we still haven't made a higher high on the daily yet. As you can see, we haven't broke above this level, but we have been making discrete higher lows, one in the 8th of November and also the 10th to 12th September. And this pair was looking like it was going to the downside last week. However, maybe due to the low liquidity, it rejected the daily 50 EMA numerous times, and then it shot back up on Friday. So as you can see, if we go down to the 4 hour, price is being capped by this 71% fib level, as it's rejected it now around 4 times. And we've created this structure here where it's created this dynamic support. So it's very possible we could see both scenarios on this pair again, similar to CAD Yen, where it's in quite a indecisive area at the moment. Could easily see this pair go long with a third touch of this structure, which coincides with the daily 50 EMA. Could take a long position here if we do see a rejection and then push to the upside. Or what we could easily see is price stall around here, break below the 50, retest, and then go short. But as I say, this pair could go either way at this point in time. It's best to just sit on the hands, and like I said, we could see that break through, retest this structure, would still have the descending trend line, the 50 EMA, and then take it down to 60500, which will coincide with the third touch of the bottom of this larger structure. So that is two very interesting scenarios on this pair. The safest way on either would be to wait for a break and retest. So the risky entry would be third touch of this inner pattern here to go long, whereas either way, what I'd suggest is wait for, if we do see the rejection, break of this structure, retest, because then it's then taken out the Fibonacci and then to the upside, but we still haven't made a higher high yet, so there is the possibility of that downside potential. So a key area to look out for this pair, be prepared to capitalise on either scenario. Next up we have Aussie USD, yet another Aussie pair. And as you can see, it's coming into this nice area of interest. We are very low in the charts of Aussie USD, as I have mentioned previously. Price is making its way down to the golden pocket of the Fibonacci, which has the added confluence of this lovely support band here, which has held price quite nicely since August. We are very low in the charts here, so the upside potential is rather large, as you can see. And we also have the monthly level of 0.6700 here also. So what I'll be looking for this pair is price to interact with this 71 level, price to stall, various rejection candles, dojis, hammer candles, anything of that nature, and then look on that signal to take it long, first to the 0% fib, and then after that to the minus 27%. This is a great risk to reward trade, as there is the potential of downside. However, we have made a higher high here, and this will make a higher low on the daily, so this would make us into a bullish structure to take to the upside. However, failing that, if we do break below this Fibonacci here and we go below 0.6700, just simply wait for a break and retest. However, we've got to think probable versus possible. This is possible scenario, however the likelihood of it happening is very slim. So the probable scenario is rejection of the 71.8 fib, take it up to the minus 27% here. So yeah, this is a key area for this pair again. So just keep your eye out, look out for it, set price alerts, monitor price action, and if you do see the rejection, don't be afraid to get in. You've done your analysis and let the trade play out. Next we have EURUSD. This is one of the trades that I'm currently in. I took a similar trade on this pair around 2 weeks ago. As you can see, we had this falling wedge pattern and price very nicely reversed out. Did stall around the daily 50 EMA again and has come back down for a double bottom. Hit the 61.8 favoured fib level, and on Friday, as I mentioned with the USD sell-off, when I was looking at the DXY, you saw this lovely rejection on the 61.8. I do expect price to go to the upside, as mentioned. So to get in on this pair, as already mentioned, a clean entry was taken here on Friday. The best way to approach this would be on a break and retest of either the 4-hour 50 EMA. As you can see, with market open, we had a bit of a gap. 4-hour 50 EMA, come up, break through, and retest this level. Or for safer entry, which will coincide with the daily 50, as the daily 50 is only around 30 pips away. So I'd wait for a break and retest of the daily 50 to get in on this pair. I'll be looking at this for a scaling. So do definitely keep this on your watch list, as it is a very favourable setup. Again, we are quite low in the charts, and this will coincide nicely with Euro-Aussie long, as I mentioned, could happen. So yeah, definitely keep an eye out for an entry on this pair. Next, I'm going to move on to £2 pairs, and I don't tend to trade pound pairs too often, just because of the amount of volatility with Brexit, the election, etc., etc. The slightest bit of news can set it off, and it can fly around 100 pips in a matter of moments. But I picked out these £2 pairs because they're in very similar areas together. So I've gone on to the weekly and taken a fib from this high here to this low. And both of pound CAD and pound yen, which I'll go on to in a minute, have hit the favoured golden pocket on the Fibonacci. And also this support and resistance band, which you can see prices interacted a lot within the past year. This goes back to October 2018, and even if we go back before that, you can see here various interactions. So this indicates that it's quite a strong level. This would be a counter trend trade if taken, because we are in a bullish structure currently. As you can see, higher highs, higher lows, higher highs, higher lows. So what I'd be waiting for on this pair is a break and retest of this counter trend line. Hopefully breaking this low here on the 4 hour. So what we could see is a break of this, negating this bullish structure, retest of this support and resistance band, and then take down further. However, with this does come higher risk, as we are going against the trend. I don't usually trade against the trend, however, it is still a valid option to trade this way. I do like to trade this way sometimes if there aren't as many trend setups that I do favour. So yeah, I will be waiting for a break of this level, retest of this zone, and then take down further. First interaction will probably be with a daily 50 EMA. And as I mentioned at the start of this video, a lot of these pairs that I'm looking at are 100 pips off. However, with pound CAD and pound yen, this could happen in a matter of hours just due to the volatility. So if you do have a higher risk appetite, these could be good trades to take. There was one that you could, if you really wanted to take this trade, if we did see another double top here and a solid rejection, you would have this support and resistance zone, the support and resistance band, and the 71.8 fib. But as I did mention, that is a very risky way to go about this pair, especially with the bullishness of the pound. So there is two scenarios depending on which risk appetite you would prefer to go with on this pair. And for the final pair for today's video is the second of the pound pairs I mentioned previously. So this is pound yen, which didn't make it into my watch list last week due to Instagram cutting me off once again. And similar to pound CAD, it is in this area of the golden pocket Fibonacci zone on a weekly time frame, with a Fibonacci taken from this high here to this low. So these levels are very strong levels, which you can see again, which is supported by a support and resistance band taken back from September 2018 right up until now. This also has the supported confluences of this descending trend line here, 71.8 fib, and this zone. Again, this will be a counter trend trade, as on the daily time frame we are clearly going against the trend here with higher highs, higher lows and higher highs. But this is the importance of multi-time frame analysis, as the bigger time frames give us more information on what price is doing, as this could just be an elongated pullback, a much needed pullback that was needed for the pound pairs, and it's coming into a nice area of interest now. This one for me is much harder to enter than pound CAD. Pound CAD's got a clear, obvious entry with a breakthrough and retracement in order to take it short. This would just simply be interaction with this zone, a strong bearish rejection, and then a close under either the 4 hour or the 1 hour. So this is the most risky of the trades I've mentioned so far. as we could easily see price break through this level and continue to the upside. However, I wanted to add a bit of variance into my watch list this week to give people with different risk appetite different options and entries. And then, as I mentioned, it would be a counter trend trade. The first target I'd be looking to take it down towards is the 38.2% Fibonacci, which I've drawn from this low to this high. As I did mention, we are in a bullish structure on the lower time frames, so it is key to look out for these levels when we are taking a counter trend trade. That is it for the watch list this week. Thanks very much for tuning in. If you've got any questions, feel free to pop them down below. Give it a share, a like and a comment. And if you do take any trades, please do let me know. It'd be interesting to hear your thoughts on some of these pairs yourselves. And like always, trade safe and have a good week. Cheers.